Hello everyone. I'm excited to share with you the latest developments surrounding Tesla, a company that has been making waves in the automotive industry for quite some time. As a long-term supporter of the company, I believe that Tesla's shares are undervalued and that owning Tesla stock requires a special combination of great imagination and, most importantly, patience. But first, make sure to subscribe to Wall Street Games. If you haven't already, now is the perfect time to do so. You can also give this video a huge thumbs up by clicking the button above. Only long-term investors may find it easy to handle the roller coaster of experience that comes with investing in this company. Despite its volatility, the company will probably continue to be a great long-term investment. Tesla, even if Tesla's delivery and sales figures have fluctuated, the business is clearly doing exciting things, and its auto manufacturing will probably continue to increase steadily. The amount of cars that Tesla can deliver has been used by a lot of investors and experts to anticipate the company's future. And once more, analysts are beginning to project that Tesla will be the year's biggest deliverer. Some of the top analysts in the business presently rate Tesla stock as a strong buy. The company just reported record quarterly car deliveries, which is fantastic news. But quarter-over-quarter sales growth was only moderate despite price reductions by the car company in a number of locations. Due to increased competition and indirect economic output, Tesla lowered the price of several of its vehicles. In late 2022, the company did the same with its Model 3 and Model Y vehicles in Australia, France, Germany, and other countries. The Netherlands, Norway, Switzerland, and the UK saw price reductions. The company is responding to the nation's call for practical actions to promote economic development and release the potential of domestic demand. This move is in line with Tesla's long-term strategy of expanding its reach in the Chinese market, which is one of the largest markets for electric vehicles globally. Despite the positive response from Tesla's leadership, some analysts claim that the price cuts did not yield the expected results, while many expected that these price cuts would result in enormous demand for Tesla cars. Recently, Tesla decided to lower its prices. This decision was supported by numerous engineering innovations that allowed the company to lower its cost of production. According to Grace Tao, Vice President for External Relations in China, encompassing market circumstances, customer conduct, and rivalry, notwithstanding the conflicting responses to its most recent price reductions, Tesla is still dedicated to its goal of speeding up the global switch to sustainable energy engineering innovations and growing its global presence. According to definitive data, Tesla is expected to maintain its prominent position in the electric vehicle market. Let's take a closer look at the numbers. In the first 3 months of this year, Tesla delivered 422,875 vehicles, up 4% from the previous quarter and 36% from a year earlier. When comparing first quarter deliveries to analyst forecasts, Tesla delivered 430,000 vehicles. Despite this Tesla bull run, other data indicates that Wall Street was expecting Tesla to post deliveries of about 432,000 cars for the quarter. According to Gary Black, Tesla revealed that a group of over 20 analysts predicted that 421,500 vehicles would be delivered. Tesla delivered 422,875 vehicles, above Wall Street predictions, but missing the number determined by Refinitiv and other estimates. It is noteworthy that Tesla produced more cars than it delivered in the first quarter of the year, totaling 440,808 vehicles. Overall, it is evident that Tesla is still making progress in the automotive industry and continues to innovate, despite certain obstacles to be overcome. Deliveries of the company's mainstream Model 3 and Model Y vehicles increased by 6% from the previous quarter, but those of its more expensive Model X and Model S vehicles fell by 38%. Tesla has been very busy recovering from the lockdown that occurred in China and increasing production at new factories in Texas and Berlin. The automaker just tweeted that it is a Texas factory, constructed 4,000 models in a week, while its German facility was churning out 4,000 vehicles every week, even though the CFRA analysis indicates a delivery miss. Recently, Garrett Nelson raised his price target for Tesla shares from $250 to $275 and upgraded it to a strong buy recommendation. Nelson, however, reiterates his strong buy rating for Tesla, saying the company has a lot going for it. After Tesla's delivery report, Citigroup analyst TSLA stated he anticipates a minor decline in the company's shares. With a softer mix and lingering inventory, Q1 deliveries are likely to be an inline result, and the rising gap between production and deliveries will probably keep attention on more pricing codes. As a result, Tesla shares may modestly retreat. Bill worries that the main issue now plaguing analysts and investors is, according to Tesla's earnings report, for the first quarter of 2021. The company's sales revenue increased by 70.64% to $53.8 billion from $31.5 billion in 2020. VW is now the second largest electric vehicle producer in terms of market share and revenue after Tesla. On January 25, 2023, Tesla released its fourth quarter profits, exceeding expectations in terms of both earnings and sales. The automaker recorded automotive revenue of $21.3 billion during the quarter, a 33% increase over the previous year. The most recent indication that Tesla has done a fantastic job navigating through the logistical issues and global supply chain is its strong quarter. Tesla has delivered over 4 million vehicles to date, weathering the storm better than other legacy manufacturers. Yet the automaker faces significant near-term obstacles, including persistently elevated prices, an impending economic downturn, and the continuous worldwide scarcity of chips in numerous supply chain problems. Despite these difficulties, in 2022, Tesla shipped 1,331,851 automobiles to customers worldwide, up 40% from the previous year and 40% higher than in 2021. As some automakers reported their lowest sales statistics in 10 years, the delivery figures for Tesla were impressive. The question still stands: will 2022 be a better year for Tesla? The first Tesla vehicles were created at the newly opened Giga Berlin factory in Germany by March of that year. Elon Musk, the CEO of Tesla, intends to transform Giga Berlin into a European jewel. Tesla has expanded its global factories, including this one. Additionally, the Chinese facility was upgraded so that it could produce up to 750,000 Model 3 and Model Y electric cars a year by 2022. According to Gene Munster, a managing partner at Deepwater Asset Management, Tesla established the capacity across all of its factories to make 1.8 million Model Y and Model 3 vehicles annually, in addition to 100,000 Model S and X vehicles. Due to recent price cuts, there is still more downside for Tesla stock, and investors should brace for a 25% decline in future earnings. Although he has been a longtime supporter of Tesla and believes the company's shares are cheap, he is still apprehensive in the short run because of the pressure on earnings from some of the discounting that has occurred when discussing Tesla's price reductions. The founder of Loot Ventures is optimistic about Tesla and believes that there are a few good reasons to own Tesla stock in 2023. The biggest obstacle for Tesla has always been its valuation. But as the car company's surge in sales and profits is proven, a business can grow into a high venture evaluation over time. At the beginning of this year, Tesla had a price-to-earnings ratio under 30 across the sales ratio under 5 and a price-to-free cash flow ratio under 50. Gene Munster stated that if Tesla hadn't made the price cuts, it would have been pretty ugly. Since then, the stock price has increased along with all three indicators. So while it's undeniable that Tesla, although the stock isn't as cheap as it was at the start of the year, if the firm can continue growing at a breakneck pace, its valuation isn't unrealistic. Nevertheless, buying Tesla stock at this time could be a wise move. The best course of action for most investors could be to own a reasonable but not overly sizable position in Tesla, and then let the multi-decade investment visas play out. Do you think investors should hold on to their Tesla shares? Let us know below, and don't forget to tell us your evaluation of Tesla. One of the biggest mistakes an investor can make is allocating too much attention, time, and money to one stock. The biggest opposition can make it easier to make an impulsive decision when stock prices are falling with no end in sight. What should I do? See you there. Thank you for watching. And if you liked the video, please remember to hit the like button, subscribe, and turn on notifications to receive updates on anything Tesla releases.